Hey everyone, let's take a look at the relative strength index and how they coordinate and work together with Bollinger Bands to let you know whether you should be buying or selling a stock. Relative strength index is this chart right here. It's measured by these two lines. This is the overbought line and this is the oversold line. It's number 30 for oversold and number 70 for overbought. When it crosses over one of these lines, what it's telling you is that the stock is either overbought or oversold. So in this case, you can see two examples here of it being in overbought territory. Overbought just means that there's too much volume, there's too much buying, and that there's going to be some profit taking here. Now the way it works is that they look at the recent past performance of this stock. The chart works by showing you how it's behaved recently and how it could potentially behave today right here in real time. So what we're seeing here is two examples of it entering overbought territory. It's saying to you there's going to be a pullback here. Not a guarantee, right? It's important to say that these indicators are just indicators. They're not guarantees. Just because it does something on a chart doesn't mean that it's going to sell off or rebound. It's just telling you, hey, start paying attention here. There's some things you're going to want to start looking at, like the Bollinger Bands and like the volume that's over here in blue. So the way it works is like this. Here's a real-time example of a trade that I just made just now. I saw that this stock broke out at around $3.30. It breaks out to the upside. But I'm not sure I'm ready to buy yet. So I want to wait for another couple of breakouts. I want to see that there's real continued growth here. And that's why using Bollinger Bands helps. And it also helps to look at the volume here. I want to be seeing an increase in sales. I want to see more volume pushing the stock higher and higher. And I do. I see 1, 2, 3 breakouts. That seems like a pretty good signal to me. Even though the volume isn't super strong, I'm getting what I need out of it. I'm seeing 3 breakouts. I'm seeing a sustained rally. So I bought the stock at right here, 334. Right into oversold territory. You can look right below on the chart and you'll see at the relative strength that it's saying, oops, maybe I bought a little too aggressively into this rally and I could have waited potentially for a pullback. But I wasn't nervous and I wasn't worried about that because it stayed right here above this support line. This is the 20-day moving average. And so long as the stock is staying in positive territory above this support line, this 20-day moving average, I'm not particularly worried that, yeah, I bought it at 334 and then it dropped to 330. I don't care. I'm going to keep holding. Reason being is that it's staying on this side of the trend line. So even though the relative strength is saying, hey, you just bought it oversold, Bollinger Bands are saying something different. They're saying, it's all right. It's all right. See, what happens here is you missed your chance to buy here at 330. And so you've been watching going, oh man, it went up almost 10 cents. On 1,000 shares, that's about a $100 profit. Pretty quick. And you missed that chance. But now you've noticed, hey, it dropped a little, but it didn't break this support line. Didn't break the support line. And it's exactly where it was when I missed my chance over here. So I'm going to come back in. And evidently, a lot of people had that idea. A lot of people started buying right here. And even though it does cross this line, it's not reason to panic. Real reason to panic comes when it crosses this line, the official support line for the Bollinger Bands. This is support and this is resistance. So when it breaks through resistance, it signals a buying opportunity. When it breaks through support, it signals, rally could be over, and it drops. This is just telling you, hey, start paying attention one way or the other. And look what ends up happening. Boom. Breakout. And it again enters overbought territory. Now, just because it crosses over this line doesn't mean you need to sell immediately. It just is alerting you to the fact that you might want to consider selling because there might be a pullback. Now, I've mentioned in one of my TikTok videos that I had seen someone the other day who said, be a little less greedy than the other guy. So I bought it at 334, right around here, and I sold it at 350. And you can see right now, because we're sitting here in real time, it's 354 and a half. So I sold a little early, but I prevented myself from being extra greedy. Because what tends to happen when we're very greedy about a stock is I say, this is my plan. I'm out at 350. But then it goes up and I go, well, if it went to 350 that quickly, maybe I'll hold to see if it gets to 360. And it might get to 360. But then what happens? It's going to be in overbought territory for a very long time. That's when the selling starts. So is it worth holding out for that extra 10 cents, for that extra couple of bucks? Or is it the smart move to lock in your profits? Well, the relative strength is telling me right at around the 350 mark that we are in oversold territory, and it would be smart to maybe exit. So I did. I took my profits. I was very happy with that. Now, the flip side of that is oversold. Here we are with another example of a different company. This is Occidental Petroleum. And you can see that it has entered oversold territory. Look at this drop. So the stock opens today at around 1353 and immediately crashes. Boom, to 1293. Pretty steep sell-off. And relative strength is telling us, even though it's crossed this line, you probably don't want to buy it right here. At this point, it would be around 1320s. Look where it keeps going. So, to my point, these are just indicators. They're not guarantees. Just because it says that it's oversold, that too many people are selling, doesn't mean that it's magically going to reverse course and go higher. It just means take notice. Start paying attention for a recovery. Start paying attention for a little bit of a rebound. And sure enough, at a certain point, it has a pretty steep recovery. So it's down here, it's 1293, and then it shoots up to 1330. Let's just do a little math here. Excuse me while I find my calculator. 1330 minus 1293 is an increase of 37 cents. If you had purchased 1,000 shares, that would have been your profit. Very quick turnaround. And keeping in mind that this stock has had a very steep sell-off, and it never seems to get back over this 20-day moving average at this point, and the volume kind of starts to slow, is an indicator that you might want to take a very quick profit on this one, right? It never gets quite to where it needs to be before it starts to reverse course and head back lower, and lower still. And yes, see, here's an indicator that doesn't work. It breaks out to the upside, but there's just not enough volume to sustain a rally, and instead, it crashes. And it enters into oversold territory again. Now let's take a look, since we're doing this in real time. Enters oversold at 1272, it looks like. And look what starts to happen. It starts to get some buyers coming in. Now, for the 48th time in this video, I have to tell you it's not a guarantee. Just because it hits this line doesn't mean that it's going to go straight up, as you can see from this example. And just because it breaks out to the upside on this Bollinger Band doesn't necessarily mean that it's going to. That's why we like to use several different indicators to confirm our theory. Like, for example, the MACD, which I'm going to do a video on much later, is saying even though it's breaking out to the upside here, we're saying it's going to head lower. That's the importance of having a lot of different videos to look at and use. I mean, I said videos, but what I meant to say was indicators. It's the important thing to use a lot of different indicators because they help us establish our point. They help us establish whether or not we think a stock is going to go up. And you want to have confirmation. You don't want to just say, well, this one said that it's going to go up, so I'm going to buy it. Because this one was wrong. So let's look at the others. Let's look at them and see what all of our indicators say. And it's a good idea to only use 2 to 3 indicators, right? You don't want to muddy the waters and have 15 different indicators. It slows you down. It's not really necessary. But, funny enough, as we're sitting here in real time, what was it? 1272? And now it's 1287. So we're in the midst of a little bit of a rally. Some people like to buy it down here, right when it crosses over. Other people like to wait for more confirmation and more positive stuff, like a crossing of the 20-day or a crossing of the top of the resistance line. But sometimes it's useful for a very quick trade to say, oop, it's oversold. I'm going to hop in, hop out real quick. In order to do that and make it profitable, though, you need a lot of money, so you can buy a lot of shares and benefit from a very small price increase, right? So it was $12.72, now it's $12.82. That's around a 10-cent gain on 1,000 shares. It's 100 quick bucks. So I hope this video was helpful explaining the relative strength index and why we like to use it in coordination with Bollinger Bands. If you thought this video was helpful, and I bet you did, please like and subscribe, hit the little bell so you can get some notifications, and thanks for watching. Have a good rest of your day.